Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets are off the day's low and are back in the green. The Nifty trades with marginal gains around the 11,000 mark, helped by recovery seen in banking stocks. The Nifty PSU banking index is off the lows of the day but remains the top sectoral loser. All components of the index are trading with losses. Titan is the top gainer on Nifty today. The stock trades above its 50-day moving average and is up nearly 5% this week. And real estate stocks are in focus in hopes of a relief package from the government. The Nifty Realty Index is the top sectoral gainer today. All but two constituents are trading with gains. Good afternoon, Neeraj. So far, it was a range-bound session, but I think we've seen a sharp recovery in the last half an hour of trade.
And maybe that helps us end the week in a much more positive note than otherwise, Navneet. But yeah, you're right. There's a bit of a sharp recovery that Navneet was speaking about. Pretty similar, the chart, the start and the chart thus far with a few jagged edges in between. The banks are also, muted in that sense relatively compared to the last few days, but a bit of a recovery in the last few minutes as well. Bring up the turnover and bring up the heat map. Is the first day of the new weekly series, still away from the monthly expiry as well, and therefore the FNO volumes substantially lower. 1/4, currently they are 1/4 what the total volumes were yesterday. Cash market volumes about 15,000, so probably reach about 30,000 crores any which ways. Get the heat map very quickly and show you what's moving and what's not. When we started off, the market breadth was even Stevens, and that's what it is right now as well. India Bulls Housing Finance, a lot of these NBFCs, real estate exposed NBFCs, India Bulls, Piramal, etc., GIC Housing Finance have all come off. India Bulls Housing Finance right there. Dr. Reddy's has corrected a little bit in the session. HDFC and HDFC Bank are down a bit in trade today. But the gainers, Titan, Maruti, ICICI Bank, Bajaj Finance, consumption is getting a bit of a boost today. Kotak Bank as well. For some of these banks, the new regulations from RBI would also be beneficial, and IT has not had a bad day with the likes of Infosys and HCL Tech right up there in the list of gainers. What about the broad end of the spectrum, Divya?
Well, there has been outperformance, and we've been noticing that since the last 5 days of trade, and that's probably something that we'll notice even in today's session. For the small cap index in particular, mid caps not all that much, but the small cap index has really been perking up. In today's session, the mid cap index is marginally higher. You've got gains in the form of a PI Industries, Jubilant Life Sciences, HEG. HEG and Graphite both have seen a big move in the last 3 or 4 trading sessions. Info Edge is up about 2.5% along with Escorts as well. Amongst the losers, you have Glenmark Pharma, which is down about 3% Edelweiss continues to reel under pressure. IDFC First Bank, that too is down about 1.5%. LIC and Reliance Infrastructure, these are the names that have lost out. Amongst the small cap space, better off in terms of performance compared to what the mid cap index has been doing. You've got MMTC doing well. ITDC, in fact, 16% higher in today's session. Last 7 days is very quietly crept up. So if you add up the last 7 days move, the stock is more than 50% up. So this one is something to keep an eye out on. First Source Solutions are up about 4%. Seat, Lemon Tree, big names there. And then you've got the likes of Jet Airways, NCC, Oriental Bank of Commerce, and Walkhard, which loses about 4% after having a really stupendous 2 days of trade, which was, I think, the day before yesterday, when it added up closer to about 35% in a matter of 2 days. But what's happening in the broader market space, this is what you've got. The futures and options space, that's a more liquid universe to watch out for. Navneet is joining us right now to highlight, what are the trends out there. Navneet, good afternoon.
Good afternoon, Davina, and thanks for that. It's been a lackluster trading day, especially for Nifty. On the Nifty side, we've not seen any major build-up. When you look at the futures, just about 1% or 1.5% higher. It's Bank Nifty, actually, where more of action has been seen in the past 6 to 7 trading session, where yesterday was a day of unwinding. Today, we are seeing some bit of incremental positions coming by, and the premium too has picked up from 5 points to almost 36 points, indicating maybe at lower levels there were some long positions being added on the Bank Nifty futures. The good sign also is yesterday we fell, and today also for majority of the session when the index was gyrating just about in the range of 40 points. India Volatility Index has not moved much, which could be a comforting sign for the bulls. In fact, it is still down about 1.5% at levels of 14.7. Looking at the options data, the maximum open interest on the call side for the next Thursday expiry scheduled on September 19th is at the 11,100 call. The one on your screen is, by the way, the monthly expiry of September 26th. For September 19th, it's 11,100, followed by 11,000 put strike. So the range is narrow, but we've been reiterating on the downside, 10,900 is your support, and on the upside, resistance will come at the mark of 11,150, which we have seen Nifty taking a U-turn in the past at least in the August series. On the future side, Titan is the top gainer on Nifty. The stock has crossed its 50-day moving average today. In fact, for the week as well, the stock's up nearly 5% in trade. Just looking at the delivery data, it looks like cash-based buying, because last when I checked, almost 39% of the quantity traded on National Stock Exchange has been marked for delivery. So that's a positive sign. Kajaria Ceramics is the other one, which has outperformed for the week. It's up 8.5%. The stock is trading above its 50-day moving average, and the futures of this one have seen a lot of OI build up today, 17% higher as we speak. And lastly, L&T Finance Holdings is in focus as the stock has seen some correction today. It has been taking support at its 50-day moving average, shorting seen on the future side, and the stock today falls on very high volumes on the cash side. As seen on the screen, the white line is projecting today's volume vis-a-vis the average volume that we've seen in the last 20 days.
Okay, let's get a market voice. Sanjay Sinha of Citrus Advisors joins us right now on the show. Sanjay, good afternoon. Thanks so much for joining in. Neeraj here. Good having you. This week will go down as a week wherein we've seen a return of some risk appetite, because the mid caps and small caps are outperforming the large caps. You reckon not the animal spirits, but some bit of risk appetite is back?
I think it will be a little too early to pass that judgment, because if you recall, we have seen something like this happening in the middle of February in this calendar year. The mid caps and small caps started rallying somewhere around 15th or 18th of February, but that rally got fizzled out by the first week of April. Right now, I think there is a certain amount of optimism that is building up that the festive season will augur well for consumption. Will see a reasonably good pickup in sales of many of the consumption items, including the discretionary. In case the monthly numbers that start coming out from October, if those numbers do not give support to this expectation, then I am not very sure whether this rally will sustain. But we also need to take into account the other thing which has happened, which is that post a relentless everyday selling that we have got from FIIs in the month of July and August, September has seen some respite, in the sense that the trend of the selling has initially reduced and in fact has become positive over the last couple of days. So if the FII selling is going to move away from the market, I think that also could be a little positive for the small and mid caps, because post April, in the last 6 months, the AMFI data that has come out of 35,000 crores of inflows that have come into equity funds, more than 10,000 crore has actually come to the mid and small cap segment. So that itself is a very telling number, which should, in my opinion, go in favor of the mid and small cap segment of the market.
Okay. Sanjay, let's work with an assumption that it's too soon to say, but there are people who might want to put in some amount of money behind a little bit of risk. Where do you think is the risk? Is it necessarily on the size of the market, or is it a specific pocket which has not come out of the woods as yet, but people might be betting on it?
So I think the clear and present danger that you see before you is the NBFC space, because the series of bad news that has been coming out from that space does not seem to have abated. The big question is that whether all of it is in the price, given the fact that we have seen significant amount of price correction in the NBFC stocks. You could say that it is done. I would say that it would make prudent sense to err on the side of caution and stay away from that space. So that would be one pocket. The other pocket, which I would say would not may be something that may warrant a little bit of caution, could be the auto space, because the auto stocks did correct significantly and from their bottom are up anywhere between 10, 15 to 20%. Now if the numbers do not come out positively, then there is this rally has every reason to fizzle out. So that would be the other pocket where one could be a little careful when one is participating in the mid and small cap space, if I've understood that was the specific reference.
Okay. Just to get in a sense from you now, on a monthly basis, we track a few mutual funds and the kind of portfolio rejigs that they undertake. Do you feel that at this juncture, everyone's turning a little bit more defensive, starting to look at, private sector banks, consumption-oriented themes? And obviously, you will start to see a gradual downtick in the names, some of the troubled names that we've seen in the past.
I think that is very natural in a bearish market. When you see the stock prices correcting almost relentlessly, then you will obviously go and look for safety where you see a comfort in the sector regardless of the valuation. I think that is very evident in the stock prices that we have seen over the last 1 month, if not over the last 3 months. So that trend is very much there. But having said that, the other number that I pointed out to you, the retail flows which is coming to institutional segment, which is the collection by the mutual funds, there if almost 1/3 of the collection is coming to the mid and small cap funds, I think that is also is a telling example that the retail appetite is not necessarily looking at only defensive options. The choice of mid cap funds is an obvious indication that the risk appetite on the retail front to a large extent remains intact. And there, if you look at the other statistical number, which is that from the peak that the small cap and the mid cap index had touched in the month of say January 2018, and also the Nifty, from that peak we have seen the Nifty reclaim the previous peak and probably go beyond that. But the small cap and the mid cap index are at a significant decline to those levels in absolute terms. In fact, the small cap index is down almost 40 to 45% from that level, and we have been in that situation now for almost 20 months. So I think in terms of time, in terms of price, significant amount of correction has happened. In the last 6 quarters, there has been surely some EPS improvements in many of the mid cap and small cap companies. So in terms of valuation also they look attractive. So I think as a market we now have most of the numbers standing in our favor as far as making a case for participation is concerned.
Okay. Should pull up a BPCL to see what that stock is up to, because I believe there were some flashes on the Bloomberg which suggested that the government is mulling a stake sale in BPCL to an overseas oil firm. The stock has started to move up post that announcement. It's at about 400 right now. Remember, just a few weeks ago, there were talks of the government looking to sell its entire stake in BPCL, which is worth about 40,000 crores, to IOC. But don't know where that's at right now. But with this fresh piece of information coming in on the Bloomberg terminal, it's definitely got the stock all riled up. 5 million shares on the stock is already traded, 400 on the counter. Sanjay, just come in on pockets that particularly interest you, and is the PSU basket, I'm not just talking about banks, but the entire PSU basket, is anything of interest out there?
So within the PSU basket, most of them actually have been wealth destroyers. But within that, there have been pockets which are interesting, especially the PSUs which are in the gas-related sectors, more to with transmission and distribution of gas. Those companies look very attractive within the PSUs. The second segment are the ones which are, the pure engineering players within the PSUs. They may today be getting a large amount of their orders internally from the other government PSUs, but in terms of their fundamentals, they have been reasonably strongly poised. And mind you, given the fact that these are relatively smaller companies, the government has not gone ahead and dipped into their reserves to buy from one pocket and sell it to the other and claim that the disinvestment targets have been met. So these two segments within the PSU, the gas distribution and transmission, as well as the engineering companies in the PSUs, they look attractive to me.
Sanjay, besides the PSU basket, which has seen some bit of buying interest, at least in the last week, we have seen the PSE index moving higher. But which are the other sectors, considering the sort of volatility or correction we've seen in the last 2 to 3 months, where you do see some bit of investment opportunity?
So, one segment that has got hit very hard has been the construction sector within the infrastructure. And part of it has come because of, actions which are more to do with politics than to do with the fundamental nature of these companies or the business that they are conducting. I think once the cloud clears on some of these political issues, I'm specifically referring to the developments, say, in Andhra Pradesh, or also to some news items that came with reference to the NHAI. So once these news items get, the air around these news items gets cleared, I think that is one pocket of opportunity that I see within the market. The other pocket which I think has a relative amount of insulation from all of this is the pharma. The spate of bad news that was coming in a series from the FDA observations in 2017 and most parts of 2018. Now that is behind us, and we now see more positive news coming out from there. So that is the other segment where I see opportunity. Third is that if we take a call as to which way is the rupee headed, are we looking at the rupee strengthening from here, or is it likely to depreciate more? So if that is going to be the case, and this, if we are going to see this in the background of the ECB announcement of yesterday, I see that the IT sector could be one defensive sector that could be a good bet, because at least all things said and done, you have reasonable amount of growth coming in from the IT players, though the participation of the stocks in the large cap segment has been extremely strong vis-a-vis most of the mid cap players. But I think once the sector sees certain amount of tailwind coming from the rupee depreciation and a little better growth outlook for the global economy, this could be the other sector that will look promising.
Okay, Sanjay, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, we spoke about PSUs with a reason. There is one PSU which is very active because the government is evaluating options of selling majority stake in that company, which is BPCL, to a global oil company. And this is in stark contrast to the news flow that has been believed earlier. Siddharth Singh of Bloomberg News joins us now on this exclusive story. Siddharth, what are you learning, and how is this change coming about?
See, I don't know. I don't know how we're reading it, but basically the idea is government is very clear. They want to offload the entire stake in Bharat Petroleum to anybody who's willing to take it up. But the discussions are currently very preliminary. So what shape it finally takes up, we don't know. But one of the considerations is that if government is also open to the idea of selling it to any foreign oil major, because what happens is that company would bring in competition, would bring in huge amount of money into this company. So what they're expecting is that it would kind of shake up the India's retail fuel sector. So they would bring in some kind of competition also, because now, currently we have one or two public sector entities, plus we have one or two private sector players. So what they believe in, bringing in a foreign company directly into retailing into India would bring in some kind of competition, as well as it also helps government raise the money.
The interesting bit is, Siddharth, that they are looking to do it not with the smallest oil marketing company, well, that is also anyway sold off, but and again not with the largest, but the one which is about 80,000 crores and on which the conversations hitherto were of getting merged or divested with a local company. And now we are suddenly talking about the change in thought process, which is a bit surprising.
No, see, the change in thought process also has to be seen in reality. Because how do you raise 1 lakh crores in your disinvestment kitty? Look, that's a huge number that government has set for the current financial year. So until and unless you pick up some big company and sell it off, you won't be able to raise 1 lakh crores. Plus, they also feel that at a time when these companies were were converted into public sector undertakings, there were certain social objectives. India needed security for its oil needs. But now we believe about so many years have passed on, and those objectives have also been met to a great extent. And you still have two big companies operating in the public sector, retail sector. So they would continue to do so, and it's time to go out and privatize one of these companies and also raise resources. How do you get the resources to meet your social objectives?
Yeah. All right, Siddharth, thanks very much for that. An interesting piece there because, as we were talking about it, first the conversations was with IOC, and 40,000 crores, the entire stake sale to IOC. But according to other media sources, the finance ministry raised objection to that because then that would create a monopoly in the oil marketing business, which would not be healthy. And privatization on its own side has its own benefits. A better price realization creates competition, like Siddharth just highlighted. And to that aspect, if it's not an IOC, that will not come in the way of IOC's ability to give hefty dividends to the government as well. So, all those factors kept in mind, maybe privatization actually lands up being a bigger benefit. But moving on from there, also get in a global perspective as to what's been happening. Remember, you have the Fed meet coming up next week. You have the ECB rate cut that happened, all of that and more. Let's get in a global voice to come in and discuss the same with us. So we've got Henk Potts, he's here with us on the phone line from London. Henk, thanks very much for taking out the time. What have you made out of what's been happening globally with regards to the central bank's positions and also the fact that you are looking at QE2?
Yeah, exactly right. I mean, the European Central Bank has clearly been the headline act over the course of the past 24 hours. We saw President Mario Draghi firing his big bazooka as he prepares to leave the stage. So the European Central Bank, as we know, cut the growth, cut the inflation forecast. No real surprise there. Europe's open and export-orientated economies are particularly vulnerable to slowing global growth, to trade wars, to Brexit uncertainty, and, of course, the manufacturing recession that's been taking place. But the European Central Bank did meet analysts' expectations in terms of the implementation of initiatives. So their measures, as we know, include cutting the deposit rate, cut the deposit rate by 10 basis points, taking it to minus 0.5%. And we think that's the first of a number of cuts that we'll see over the course of the next few months. We expect a further 10 basis points in December and another 10 taking place in March of next year, taking the rate back to minus 0.7%. Resurrected the quantitative easing program, more supportive forward guidance. That was perhaps the biggest surprise, said that they would maintain low rates or lower till inflation moves back towards the target level. But in some ways, you feel it was the European Central Bank holding up its hands and saying, we've used all the ammunition we can. Now it's back to political leaders to commit to that reform agenda and to introduce fiscal support as well.
Okay. Henk, the other question is, do you reckon these moves are enough to revive the spirits in the European region? I think US is probably 2-3% shy of its highs, but the European region has a fairly iffy last 6 or 7 months, and Brexit, the issues seem to be a clear and present danger.
Yeah, I think that's exactly right. There's still some risks, of course, within the Eurozone. This will help to support growth, but probably not enough to revive the fortunes across the board. A number of factors, I think, would need to come together in order to make that happen. We think growth in the Eurozone will be around 1.1% during the course of this year and slow to 0.6% as you look out to 2020. And, of course, as you say, we've got Brexit that continues to bubble away. Our central scenario there is that we think there will be a short extension to Article 50. There's most likely to be a general election in the UK, we think, towards the end of November. There's still the potential for a no-deal Brexit to play out, and that, of course, would add to the disruption that we've been seeing in the Eurozone.
And the stimulus news has not been well received, at least from certain quarters, and US President also highlighted that a move like this will only make already strong dollar going stronger going ahead, because that would make US exports less competitive. So do you think that's exactly how it's going to pan out, and we could see further strengthening of US dollar?
Yeah, I think that's most likely to be the trend that we're going to see in foreign exchange markets. All focus next week, of course, will be on the Federal Reserve, the FOMC meeting on Tuesday and Wednesday. The Federal Reserve, of course, is expected to cut rates, but still by only 25 basis points, much less than President Trump has been demanding. But I don't think we need to be overly pessimistic about the prospects for the U.S. economy. It seems an imminent recession is unlikely. In fact, we expect the U.S. economy to grow at 2.2% during the course of this year, helped by the supportive consumer. The U.S. consumer is in great shape. You've got very low levels of unemployment, pay growth that's running at a faster rate than inflation. Tax cuts have boosted disposable income. But alongside that, there are some pressures building on the U.S. economy, as we know. We know the weaker global growth environment, the uncertain trade backdrop has been impacting particularly the manufacturers and the exporters. Business investment has become more subdued as management teams have become a little bit more cautious. And we're starting to see the waning effects of the stimulus program put in place by the Trump administration. So we would expect growth to slow to around 1.6% as you look out to next year. We do think the Federal Reserve, as I say, will cut by 25 basis points on Wednesday. There's a possibility of further cuts after that during the course of this year. I think that will depend on the data. It will depend in terms of the development of some of those risks. But we think the fact that the market's pricing in 4 cuts over the course of the next 12 months looks excessive, and believe there will be some opportunities for investors to take advantage of that.
And given the current global scenario for the markets, where we've seen now ECB announcing stimulus package of almost 20 billion euros almost every month, and expectation that Fed will continue to cut rates. In fact, that's what the street is expecting. Let's see if there is any sort of resolution which comes for US and China trade war or not. Given all these factors, how do you see the fund flows panning out? Because of late, we've also seen a risk of trade where money is flowing into safe haven assets. So what's your assessment going ahead? Fund flows between developed and the developing markets, how do you see them panning out?
Listen, I think it's very important for investors to maintain their composure and to stay invested. The outlook for the global economy has been moderating, but still expect reasonable growth, somewhere around 3.1% during the course of this year. The corporate position still looks very bright to us, and therefore we continue to recommend an overweight, particularly in developed market equities, particularly in the United States, where we see the greatest opportunity. We still expect earnings growth to be positive and accelerate as you look into next year. For the S&P 500, we've got earnings growth of somewhere around 5% this year, getting up to 9% as you look through 2020. Valuations don't look overly stretched to us. Central banks, as you alluded to, I think continue to be very accommodative. For me, the fundamental question investors should be asking themselves today, do they hang on for late cycle returns, or do they position themselves very defensively for the expected recession? We think the economic cycle continues. Still lots of opportunities for investors to benefit from that. We think that they should be focusing on quality. We think active rather than passive management is going to be a really important theme that's going to play out in market, and look to take advantage of some of the volatility that we've been seeing taking place over the course of the past few months, and is likely to continue.
All right, Henk, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the global events so far. But back home, while we continue to track what's happening globally, I think the markets are at day's high currently. Nifty is at 11,030. There's been a sharp recovery that we've seen for many sectoral indices as well. Just pull up the Nifty Auto Index. I think that's sitting at day's high. And also Bank Nifty is now inching very closer to the mark of 28,000. So almost a percent higher. And Bank Nifty is at 27,960. Let's see if it can reclaim the mark of 28,000 in today's session. And of course, the stock in focus right now is BPCL, after Bloomberg has reported that the government could be in talks with MNCs to sell their 53% stake which they hold in the company. Probably this could fetch them better valuations as opposed to what the latest reports were indicating, that IOC, which is another government entity, could be picking up stake in BPCL. But moving on, and let's address the stock. Securities services provider SIS is facing the brunt of the economic slowdown as well. Revenue growth has declined in all its segments on yearly basis, while most importantly in its mainstay security services business. To get an outlook for the rest of the year, Nikki Mirchandani had a chat with Group Managing Director Rituraj Sinha. Listen in.
as regards to the growth outlook for the private security market in India, we continue to remain positive, although cautious but positive. The security sector demand is rather recession resistant, if not recession proof, and that's primarily because economic activity is one of the many demand drivers. Security demand depends on various other things, like for example the heightened terror threat across India post the J&K situation has pushed a lot of malls and a lot of public places to boost up security. Similarly, in a slowdown environment where shift cuts and job cuts are likely across industries, most industries are worried about industrial disputes, and therefore the security apparatus has been boosted up there as well. Outsourcing by the government continues. So various demand drivers continue to be intact, even as the private investment side has slowed down significantly. So we continue to believe that the sector will see growth, but we could do a tad better if the revival comes through sooner.
Any percentage that you'd like to peg in for this financial year? The levels that we're working with?
Well, we still believe that the security sector will grow 16 to 18% this year, and I must point out that across the last 15 years, the security sector has maintained growth between 15% per year to 23% per year. Globally, across economies, demand for security services expands at 1.5 times GDP growth to 3 times GDP growth, depending on the nature of the economy and the other factors in play. So I think this is an extremely recession resilient demand type. And if you pick up the global metrics, you will see that across economies over the last 40 years, in no single year has the demand for private security actually shrunk.
All right, that was actually my next question. I was going to ask you about your strategy of growth in the international markets for this financial year.
Well, like I said, the security segment growth in India remains robust, but SIS story is further boosted by the fact that we have multiple growth engines. Security segment in India is one of the 4 growth engines. The facility management in India, which provides housekeeping services, janitorial services, mechanized cleaning, mechanical, electrical, plumbing and engineering services, the demand for those services has also been very resilient. That's growing at more than 25% year on year for us. So security and FM in India are great. Even our security businesses outside of India, Security International as we call it, has maintained high single-digit growth, and moreover it's generated cash flow quarter on quarter, which has helped the India situation greatly. And the margin for the SIS International business over the last 2 quarters has shown an uptick, and we hope that that will continue.
All right, Mr. Sinha, you were talking about your facility management actually growing at a pace of around 40% in 2019 year-on-year basis. But that's relatively slower, right? We saw a 70% kind of uptick in 2018, and this time 2019 we saw a year-on-year growth of 40%. Can we expect a further slowdown in terms of growth in revenue for this segment?
Well, that's basically a base effect. Obviously percentage values on a smaller base look more significant, but I think the all important thing is that on a month-on-month basis, our facility management business has been showing more than 2% month-on-month growth, despite the expanded base. So I think on an absolute rupee value basis, the facility management business this year would probably be the highlight performer in the SIS portfolio.
When you say highlight performer, what's the percent that you're expecting?
Well, I wouldn't like to put out a forecast, a specific number as far as at this point in time of the year is concerned. But I could tell you for a fact that if you look at our numbers of the last quarter, you will see that we are doing more than 200 crores revenue per quarter. In fact, we are almost at 100 crores plus for the month. So you know, I think we would be upwards of 1,000 crores for sure. But in terms of percentage, I think I'd still wait till the next quarter to comment on that.
All right, Mr. Sinha, let's talk about your debt levels in that case, because that have gone up significantly. I believe you've taken up a few new acquisitions that in June 2019, they were around 590, 600 odd crore as compared to nearly 420 crore that we saw in March. What's your plan now? How do you intend to reduce that?
Well, that's again a reflection of what's happening in the economy currently. Security facility management type services are sector agnostic. We actually sell to all segments of industry, starting at auto ancillary to chemical to fertilizer, hotel, hospitals, you name it, and everybody is actually a user of security and facility management services. What that actually means also is that in a liquidity crisis, most of our customers across industries have pulled back on the payment cycles. That has sort of pushed our days of sales outstanding and the working capital employed in the business. We believe that this is a direct reflection of the liquidity environment, and this will take a little bit of time to correct.
All right, in that case, what's the working capital days? How much have they expanded to year-on-year basis?
Well, we are seeing a trend of almost 5 days additional DSO on the security business and maybe a 7.5 day additional DSO on the facility management side of things.
All right, the last question that I have for you in that case, Mr. Sinha, will be what's your strategy in terms of any new acquisition coming in? Is there something in pipeline?
Well, at this point in time, we are very focused on integrating the assets we bought last year. As we reported in the last quarter, the Dusters acquisition has proved to be a 30% plus IRR deal for us on a constant multiple basis. I believe that even the other assets that we acquired last year are integrating well. Almost all of them have shown a revenue growth in the last 6 months. And we believe that as of now, we are quite buckled down and focusing on integrating and growing these assets for better returns. We will look at other acquisitions maybe a little bit down the line, not immediately.
All right, that's the management of SIS commenting on their growth prospects going ahead. And just shifting focus back to markets, we are almost at the high point of the day. Nifty is sitting at levels of about 11,028. So good news is we've reclaimed the mark of 11,000. If we can close above this today, it will be a positive sign going ahead technically and also for the bulls. Good time to bring in our techies then and get their views whether any sort of fresh positions can be taken now at these levels. We've got Pritesh Mehta of ICICI Securities who joins us on the show, and also Shrikant Chouhan of Kotak Securities. Good afternoon to both of you gentlemen. Shrikant, let me come to you first. A recovery is seen in the last half an hour to 45 minutes of trade. What's the reading on the chart? Would you initiate any sort of fresh positions now on the upside?
Nifty recovered very well from the lows of almost 10,945, 950, which is positive for the market. But we need to cross the level of 11,085, which was yesterday's highest level. And till the market is not crossing this particular high, markets are going to remain in a range of or in a pattern of lower highs and higher bottom. So which is a triangle sort of formation, which is, we can say, a consolidation sort of formation. And in that case, if the market fails to cross 11,085, then we may again see the levels of 10,850, 10,830 on the downside. So that's why a strategy should be to create some short positions at current levels with a stop loss at 11,085. But in case market breaks 11,085, then in that case, we can see the levels of maybe 11,200, 11,300 in hurry. Because then after that, we can see some reversal of the formation and the reversal of the bearish formation. So similarly for Bank Nifty also, our view is same. Keep stop loss at 28,100. Go short on it and keep target of 27,750, 27,800 on the downside.
Okay. Pritesh, what about you? Would you also initiate a short position on these pullbacks, or you would stay away?
Now see, first we need to understand the structure of the market. What we saw yesterday was a classic case of retracement. We had rallied back from the levels of 10,600 to the upper end of the recent GAN trading channel, which is around 3-digit GAN number of 11,100. We made a we went to the peak of 11,082, but failed to pass it, and we as a result we retraced lower. But I think it should not be a big concern for us. We should not make a big deal out of it, because the trading range is still intact. 10,900 on the downside and 11,100 on the upside. I think when this market is trading within this range, we should be more focused on the stocks, because one thing which has caught my attention over the last 1 week has been the participation of broader markets. For last few quarters, we could simply look at the performance of something like ICICI, HDFC Twins, Bajaj Twins to gauge the mood of the market. But that is not the case right now. Since previous Wednesday, we have seen different stocks, different sectors participating. Metals in a matter of 4 days has gone up by 8%. Before yesterday's fall, auto index had gone up by 10% in a matter of 4 trading sessions. So I like to see this kind of broader based participation. It tells us that the base is improving, base is getting stronger. So I think there is enough opportunities in the markets right now to create longs from stock specific perspective. But index is going to take its own sweet time. So I think we can initiate longs only about when the GAN number of 11,100 is surpassed.
Okay. What about specific stocks then? Pritesh, very quickly, your ideas first.
One stock which has caught our attention is Motherson Sumi. The stock went through a sharp corrective move for last few months, and thereafter it found support around the lows which were seen in March 2016. It headed to the levels of 90, built a base, and moved higher. Also, if we go through this seasonality trend of this counter, Q3, Q4 tends to be very positive for Motherson Sumi. In fact, if we check the trend of the last 10 years, in Q3 and both in Q4, the stock tends to give on an average returns of 10%. So I think there is the case of going long this counter. So buy for a target of 121. And second recommendation is buy on Shriram Transport. Shriram Transport since March 2017 has a tendency to find some respect around the levels of 940, 950. Thereafter, we have seen that stock has stabilized for last 2 weeks and is on the verge of breaking out from a falling wedge pattern. So buy for a target of 1150.
Okay. And Shrikant, your ideas?
All these PSU stocks are doing really well, and they are not following to the broader pattern of the market, like BPCL, IOC. They are just going up and up without any major correction. IOC looks good to me because it is trading very close to its important resistance area, and the stock has already validated double bottom at close to 115, 116 levels. So now currently the stock is trading above its resistance level, which is positive. It is trading at 128, 129. We can expect minimum 132, maximum 135 in next few days, 1 or 2 days of time. So here we can keep stop loss at 125 and create some long position for IOC. The other stock on which we are bullish is Axis Bank, because all these private banks have again started participating in this up move. Especially Bank Nifty is outperforming to Nifty, and Axis Bank nicely corrected to its important support area at 660, 661 in today's date. So now it is again moving up, and if we see the overall pattern, then whenever it starts moving upward, it forms higher top, higher bottom series. So this time we can expect move above 690 levels. So with a target of 690, we should look for adding long position in Axis Bank with a stop loss at 660 on the downside.
Okay, let's get in Sanjiv Bhasin to speak about the fundamentals on the show. Sanjiv, good having you. Thanks so much for joining in. Your optimism last week is starting to pay dividends for now, Sanjiv. The question is, for somebody who didn't buy at the lows, and certainly the market is not dramatically higher from those levels, would you still believe that large dollops of money should be put into work currently?
Yeah, hi. So Neeraj, the works are just starting. We are looking at 1,000 points in the next 2 months. Look at the global liquidity. Donald Trump is having the Fed cut rates. The Fed has started, the ECB has started a bond buyback. Our own rates on inflation are going to be cut by 40 basis points. There is going to be no place to hide. $18 trillion in negative yields are sitting, and I think the risk on trade is back. The next 3 months may actually turn out to be the best we've seen in many, many years. And in the Indian context, now we know a lot of the teethering and tottering on the passage of money and so on, but I think you are in a very sweet spot where I think earnings, macros, all will point towards upwards. And fourthly, the rupee has quietly started to trade below 71. I am very, very confident that second half of September and October onward, you should see a strong bout of FI buying. So there are no easy lunches, but if you have been weathered this storm, stay put. I think the best is just around the corner. And like I said, I don't rule out 1,000 points on the Nifty. That's closer to 12,000 in the next 2 months, which can see, you know, a lot of pessimism get changed into optimism over a period of time.
Okay. Sanjiv, there has been some movement in the consumer stocks, both discretionary and staples, over the last few days. I don't know if the sales are returning, but the commentary from the management is not looking all that bad. What is it that you guys have gleaned when you speak to managements, or when you read about things, or watch interviews as well? What is looking strong right now in terms of the confidence of the management, and therefore worth buying into?
Yeah, good point. And if you read the headlines, aside from the murkiness, look at what Motherson Sumi is guiding. They are looking at a very strong sales growth. They've spread their basket all over. Look at Ashok Leyland. They said the worst is over. They are seeing a very, very strong uptick. You heard from the management of Titan. Asian Paints has been a huge outperformer. As a disclosure, that has been one of my biggest picks from 900 levels. And I think the paints, the cement and specialty chemical all are telling you that the business going forward is extremely robust. Now that's a far cry from how the industry is reacting, particularly autos and the others. But I think a big positive would be the price cut by Eicher Motor. So they've realized that inherent large margins may not be the key. The key is to get into volumes. And if we do get something on the GST, it will be an added advantage. Or it's over. I think the festive season should bowl extremely well for all three: consumer durables, discretionary and staples. And like I said, you have to be selective in what you buy, but you can't go wrong. On the broader front, I think credit is just starting to expand. There's been recapitalization on most of the PSU banks. They're going to take the space of the NBFCs, and the other private banks are seeing again a lot of traction on the upside. So like I said, maybe the pessimism is overdone. I would be very positive in this ongoing festive season, which starts from the end of this month and extends into the next 3 months. I think all three asset classes on consumption can do extremely well.
Okay. Sanjiv, for the top two gainers on Nifty right now, the oil marketing companies, both BPCL and IOC, have surged after Bloomberg reported that the government could look to sell stake in BPCL to a global player instead of the recent reports which emerged in one of the newspaper indicating that IOC could be picking up that stake, and the valuation, at least the stake, is worth about close to 45,000 crore. Your take on this one, because this will also take care of the big target they've set for FY20 with regard to divestment of about over 1 lakh crore. And if this happens, do you think this will fetch BPCL better valuations as opposed to earlier reports which were indicating IOC could pick up stake?
Well, I think it will be a very big positive if they can go through with such a big event. As it is, they've set the ball rolling by saying strategic disinvestment in shipping corporation, Concor stake sale. So, all this on the face of it sounds good, but you keep waiting for the events to happen or the execution. I think it will be a huge game changer if we can actually get some global entities to start to buy. Also, you are seeing a wall of liquidity which is definitely going to look at riskier assets. If you recall, I don't know if you were there in the market 20 years back when Hindustan Zinc was actually divested by the BJP government. And I was one of the participants in the deal which went through at 9 rupees when I bought UTI India Fund stock for the larger player. And look where that value has encashed over the last 20 years. Hindustan Zinc is a behemoth. So I'm not making a BPCL. All I'm saying is that we really need some of the government assets to be more monetized, and you need more flavor by just passing it around the buck. This will go down very well. Government has made its intent clear that they want to hold less than 50% in a large number of companies. And if they can go through with 2-3 of these strategic disinvestments, you should see India to be one of the most favored destinations going forward on FDI and on equity investments in the near future.
If we can just pull up the GIP, maybe a GIP 10 or something for BPCL, because it's not just today's move. I think BPCL is now surged for more sessions than not in the last 10 or 12. The 7-day chart for BPCL, this week's chart for BPCL, whichever we can show, it's had a very remarkable move. Look at that. Over 7 days, it's more often than not has an uptick, and at a consistent uptick as well. Even if there could be a day or two which is flat, but it's just that the rally is longer than the 7-day period, and this is strong showing. Sanjiv, if indeed the government were to go out and do this, what the Bloomberg story is suggesting, which is sell the stake to a foreign player, what does that do to the other two? We are all focused on BPCL and what valuation it could be at, but HPCL and IOC could also see some bit of re-rating if indeed such a deal would happen, right? This is still in the realms of possibilities, so let's not conjure too much on it. But what does it do to the other two?
Correct, and I think you will start to see at least a fair valuation. Right now they trade at below sub-par valuation. In fact, the whole PSU basket, if you ask me, so if I could advocate, the CPSE ETF will be a no-brainer to be bought for the next 3-5 years as a SIP, because that has some of the jewels on the crown. Now coming to HP, BP and IOC, I think they will be a huge encashment because they have cross holdings, but it will also tell you that there will be a fair valuation as to what the business is. And this business is driven by just these 3 companies. At a time when everything is decontrolled, then why should these be lingering around at these prices, given the dividend yields, given the other biometrics? Also, crude is in a very, very weak basket. In fact, crude is been in a very, very stalemate, which can only bode good news for net importers like India. And I think that one such move can actually set the cat amongst the pigeons. You would see a re-rating of the entire economy, the government, and a large part of the PSUs.
Okay. Sanjiv, Bhasin, you are very bullish. Where is it that you're not seeing traction?
So clearly for us, IT has been an avoid. I don't want to chase TCS, Infosys at these valuations. I'd rather play pharma on a weak rupee, but it's industrials where we are putting our money where our mouth is. We think mid caps are available for a song. They can go up 2, 3, 4, 5 times in the next 2 years. And I think the best of the party is going to start in the next 3 months, with 2020 actually heralding the best year for mid caps. So for us, the avoid is these expensive consumption plays. We don't want to be overstay our limit there. We think the broader market is giving you very, very good opportunities. You can't miss but make money in the next 3 to 4 months.
Okay, Sanjiv, we leave it at that. Thanks so much for joining us and giving us your perspective. That's Sanjiv Bhasin, very bullish. He was bullish last week as well. Thus far, it's turning out to be true. The Nifty Bank, by the way, as we speak, is up 200 points. There's some news flow as well. I think Bloomberg News is reporting that China supported US soy purchase and expands the tariff exemption. So the rhetoric on the trade war is certainly easing, and that should only aid world markets as well. I wonder what Europe is doing right now. Although it has got issues of its own, but there is a booster given by ECB, and with this happening as well, probably the stage is set. For now, Europe markets are not quite reacting too much, but the Indian market is now trading at the high point of the day. Very quickly, Shrikant, if you can give a quick thought on the Bank Nifty. It's trading 210 points at the highest point of the day.
See, it is forming a classic double bottom formation, and it will validate to it if it crosses 28,300 on the higher side. But today, if we see the Bank Nifty is crossing 28,070, which was its previous immediate yesterday's highest level, then certainly we can go long in Bank Nifty about 28,100, and we can keep stop loss somewhere close to 27,740, 750 for it, and we can expect somewhere around 28,500, 28,700 in next couple of weeks. So 28,100 is a very crucial level to cross for. Above that, certainly we should look for adding long positions.
Okay, well, really good going. The Nifty too at 11,038 is almost trying to erase some of the losses that it incurred yesterday as well. So this is smart moves really that we are seeing in the markets at large. I wonder if, Pritesh, you see any merit in trying to buy or create a trading position in the oil marketing companies at these levels?
I think so. We, as have been saying earlier, we have to be with the leaders. And the way something like HP, BP and IIFL performed in the last few days, I think the strength is coming in. But I won't be going after BPCL because the stock has already run up. But something like IOC looks very interesting to me because the stock held on, made some sort of bottom around 118, and thereafter it went above the 3-digit GAN number of 121. And what we have seen is steady up move. And currently it is trying to stage a breakout above the peak of 130. So I think there is an opportunity in IOC. We can see a move towards 140 maybe next couple of days. Maintain a stop of 125.
Okay, that's the technical view on IOC, which is up about 4% in trade. Just want to pull up a couple of other PSU stocks which have rallied. So MMTC, STC, both of them have witnessed very strong gains. Pull up the intraday chart of both. MMTC is up almost at the high point of the day, gains about 15 to 16% seen here, and even STC, that too is seeing gains of about closer to so pardon me, I think that's SCI Shipping Corporation is seeing good gains. And besides that, of course, how we've been discussing Titan, which remains one of the top gainers, technically also looking very strong. So before we proceed, let me just get a quick thought from Shrikant on the charts of Titan. Shrikant, if somebody's taken a long position here, and also today being Friday, would you advise them carrying over long positions? Do you think the stock is due for further upside, or it's time to book profits?
See, certainly it's a buy. Titan is sustaining well above the mark of 200-day simple moving average, which is around 1,080, 1,085 levels. Yesterday also, when there was sell-off in the market, the stock has arrested very well close to 1,085, 86 level, and now it is trading above the highest of the previous day. So the overall formation of last almost 2 weeks or 2 to 3 weeks, it is very clearly forming some rounding bottom sort of formation, which is indicating us that the stock is heading for at least 1170, 1185 on the higher side. So it's a buy even at current levels if there is any fresh buying view, or if there is any long position, then they just hold on to it, and we can expect 1180 to 1200 on the higher side.
Okay, that's tied in for you. Buy rating coming in there, up about 3% in trade. All right, let's talk about Kumar Infraprojects, a stock which has been in focus after the company backed a contract worth 1,998 crore rupees from MMRDA under the Mumbai Metro Rail project. To give us more details about the project, joining us now on the phone line is the Managing Director of the company, Nalin Gupta. Mr. Gupta, good afternoon, and thanks a lot for joining us. Congratulations on this order win. Give us more details. What are the execution timeline? What sort of margins you're looking at from this project, and when exactly do we see it being reflected in your top line?
Well, thanks a lot for your wishes. And this project has a timeline of, this is a metro project for Mumbai Metro Line 9, which has a timeline of 42 months as it is comprising of around 13 kilometers of elevated corridor with 2 underground station, with 2 kilometers of underground section. So 42 months is the timeline, and we expect EBITDA margins close to 16 to 17% from this business.
Target, correct me if you've given for the financial year as well, EBITDA margins of about 16 to 17%?
Yeah, that's right. We are looking at similar margins for the current financial year.
Okay, and with this order win of nearly 2,000 crore, it takes your order book to what level?
So as of after winning this order, we stand at an order book of 13,500 crores approximately.
And all these orders are under execution currently?
Well, the recent ones, as we have bagged orders to the tune of nearly 4,000 crores in the current quarter, that's August and September. So, of course, this would take a while, around a quarter, to really come into the execution cycle. But other than that, projects nearly to the tune of around 9 to 10,000 crores are into execution.
Sir, what's the status on the NBCC order? I think there were some issues with regard to land acquisition, which was worth about 550 crore order. Is there any update on that?
It's still on hold because of some approvals and land acquisition issues. So, but it's still in the pipeline.
And any more orders have you bid for?
There are some couple of more orders that we have bidded for. So we expect the news within the next 15 days' time.
Okay. All right, Mr. Gupta, we'll leave it at that. No, thanks a lot for joining us and taking us through the details of the order win that the company has bagged recently and giving margin guidance, at least for this financial year, and also from the order they've won from MMRDA. They're expecting margins of about 16 to 17% for this fiscal year. Kumar Infra, Shrikant, on the charts, would you advise someone to buy this stock at current levels of 132? We did see a sharp move after the order win news had come about.
See, all these infra companies have started showing some strength. There is volume along with price retracement, price expansion. Few of them are trading above their 200-day simple moving average, which is positive because very few stocks are gaining momentum to trade above the level of 200-day simple moving average, which is positive for any stock, or especially for all mid-cap companies. And in fact, this particular stock has spent a lot of time from October 2018 to almost this August, September 2019. And multi-times the stock has moved towards 120, 115 levels, but from there it recovered back. This time also it is recovering back, but the best part is that the broader market is also started doing well. So which will give support to this particular stock. And yes, we can expect minimum 160, 165, which is its 50% retracement area. So from here, it's a decent retracement that we can expect from current levels. So it's a buy at this price with a stop loss close to 120 levels.
Okay, let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day, and then we'll move ahead to other factors as well. He joins in right now, and it should have been a relatively easier job than what it was in the morning, Sharad, because we're trading at the highest point of the day.
Yes, Neeraj. The first stock I've picked up is Gravita India. The stock is up almost 8%, and the stock has gained almost 24% in the past 5 trading sessions, as the company stated that its Ghana arm has increased its capacity from 6,000 million tons per annum for its lead generating unit to almost 12,000 million tons per annum. Up next, you're having Motherson Sumi, which is up almost 4.4% after Goldman Sachs came out with upgraded the stock, to buy from neutral with a target price of almost 121 odd rupees. The brokerage stated that the ramp up of new plants and also execution of new orders will aid the margins. Apart from this, we have MMTC, which is up almost 18%, and this is based on the news that Indian Express stated that the company will seek to import raw onions coming in from other countries, and this deal this segment is going to come by the December end. And the next stock and the last stock we are having is Hindustan Copper, which is up almost 10.6%, and the volumes trading pretty high at almost 4 times its 20-day average. So these 4 stocks are buzzing in the space today.
All right, thanks a lot for that. We will watch out for each of these. And by the way, while we talk about stocks which are doing well based on good news, it's not such good news for SpiceJet. The Indian regulator has plans to conduct its own checks on the Boeing 737 MAX engines before it gives a go-ahead. Anurag Kotoki of Bloomberg News joins us right now with the details. Anurag, what does the DGCA have in mind?
Yes, so the DGCA wants to do their own test before letting the 737 MAX fly. Remember, 737 MAX has been grounded since 2 fatal crashes earlier this year and last year. And India also wants to make it mandatory for pilots to go fresh training on simulators. Now, Boeing has been saying that the aircraft will be back in the air in the early part of the fourth quarter. But if countries like India do their own checks and own tests, it might take longer. India, for example, does not expect the aircraft to fly this year. It expects the aircraft to fly only next year. The European aviation safety regulator has also said it will send its own test pilots to test the aircraft before it's granted permission to fly. Now, SpiceJet is one of the world's biggest customers for the model. It has as many as 205 aircraft on order. Jet Airways also is to be one of the biggest customers with more than 200 on order before Jet Airways stopped flying. For domestic capacity, it does have repercussions if deliveries don't happen, but the Indian DGCA says that safety is of paramount importance and safety will be kept in mind before letting the aircraft fly again.
Okay, thanks a lot for that, Anurag. So, important news, and let's see what happens going ahead. Actually, it's on this note and some more that I want to get in our next guest on the show, Deepak Shenoy of Capitalmind with us. Deepak, good afternoon. Thanks much for joining in. What suddenly happened? It's not that the issues have gone away. It's not that suddenly all the promoters that are looking sketchy have suddenly started smelling like roses, but the market seems to have got its mojo back.
Quite temporarily, probably, Neeraj, because I don't think the mojo of the economy is back. But markets will always climb a wall of worry. I remember in 2009 also, when the market was going up from March onwards, there was very little hope, and there was a lot of pessimism on the street, and the market was still going up. And to be honest, nobody can figure out when that actual turn happens. Having said that, there have been quite a few occasions when the market looks like it's giving a bounce, and then after a little bit of a retracement, it kind of resumes a down move and goes on further. So I think at this point we've had some positive data. Inflation still under control. We've seen some potential resolutions coming around the corner. The rupee has went all the way to 72. It's back now to 71 or below, just below in the morning. I don't know now, but there is a bunch of good news around the world as well. Suddenly Trump is tweeting that they might be striking a deal with China. There is some other, international news from the ECB, which has introduced QE that probably adds to some kind of positivity. But overall, I don't think our economy is out of the woods yet. Earnings will probably recover only after the December quarter. So it will take some time for us to see the fundamentals start to turn. Let's enjoy this market mood while it happens, because even now, even with this return of events, a lot of stocks remain at very good levels in terms of being able to buy them. And if you're looking at a long-term allocation, this still remains an interesting point to pick stocks.
Okay. Deepak, you've been tracking macros also very closely, and you highlighted how rupee is also pulled back. We've seen the rupee actually strengthening today for the sixth session. So where it had touched levels of about 72.2, it's now back to levels of about 71.1. Inflation data remains below RBI's target of about 4% for last many months now. GDP at 25-quarter low. Do you think all these factors will now weigh in when the next monetary policy takes place, and we could be seeing higher rate cuts in order to support the economy? And this is after where we've not received any sort of stimulus package from the government so far.
Yes, I think two things are sure is that the government isn't saying that we are going to go very heavily on the stimulus part of the system. The problem really is that credit isn't flowing in the economy, and things for a lot of small businessmen, from the woes of GST to lack of smaller term credit and smaller scale credit, is actually creating a lot of downstream problems. Some of them involves jobs, some of them involves car sales, purchase of consumer goods, and others simply involves the slackening or a tightening of spending in the economy, in the sense that if you were to solve some of these basic issues, I think we'll be back with job creation, we'll be back with a lot of spending. But this will take some more time because there's a lot of fear in the market. A lot of people have clamped down. We've seen a default of a company that in August had 1,900 crores, that's Artico Capital, and suddenly yesterday defaulted on 19 crores. So it's almost strange that you could have a company funded by marquee investors going to default just a month after it had nearly 2,000 crores in the bank. So this kind of situation continues to exist. I think, however, that from a macro angle, we're seeing the rupee strengthening not because RBI is doing some action. It's actually RBI is trying to weaken the rupee. But there's been a lot of foreign inflows in the debt markets and in other primary markets and through FDI recently. So there has been some kind of a corrective move over there. And I believe in the last 4 months alone, as much as FIs have taken money out of equity markets, they've put in nearly 28,000 crores since May in the debt markets. In fact, they're up 33,000 crores for this year alone in debt markets. They're still positive 45,000 crores in equity markets. So they have been a net very long on India, even if you consider the last months when they've taken out money from equities. So I don't think FIs are getting out of India. They're just reallocating between equity and debt. I think our interest rates are very high. I think the RBI needs to not just cut rates, but also push transmission in the economy. Right now, they've done one thing, which is to force banks to link floating rates to repo or a benchmark. But I think going forward, they will also have to cut repo substantially. We're not seeing inflation anywhere close to where it would be a problem. In fact, it's below the 4% midpoint. Remember, RBI has a 2% to 6% range. 4% is just the midpoint. We're below that, and we're consistently below that, even on core.
Okay, I think we've just lost that feed, but anyway, nevertheless, we got the gist of what Deepak Shenoy was trying to say. Now, let's move on to a small piece from Yash Upadhyay. PSUs have found favor in ICICI Prudential's portfolio for the month of August. It's reduced some stake in some PSU banks while increased the same in private lenders. Yash Upadhyay is here to take us through the portfolio construct in August. Yash.
That's right, Neeraj. So no clear trend emerging as such, but it is clearly that they have picked up additional stake in some of the PSUs and select banking names as well. So in terms of companies wherein they have increased their holding in the month of August, right at the top are the likes of IOC, BHEL as well as NTPC, when they bought in additional 3 crores, 2 crores and around 1.5 or 1.7 crore shares respectively in these three names. But that apart, the likes of Infosys and Tata Power also feature there. And from the banking stable, we have Federal Bank as well as Axis Bank, wherein they have added another 79 lakh shares and close to 1.09 crore shares in Federal Bank. But on the other hand, in terms of companies wherein they have reduced their holding, and again, it's the financial pack that dominates over here as well. So SBI, Yes Bank and PNB, all three of them have seen selling. SBI saw the highest selling when they have sold off almost 1.21 crore shares, along with Yes Bank and PNB. Bharti Airtel is another name that stands out. We had one of the other large AMCs actually picking up stake in its counterpart, which is Vodafone Idea, but Bharti Airtel not seeing that favor. And Adani Power is another name wherein they have sold their stake. Now, there were no new buys in the month of August, so nothing new comes into their portfolio for the very first time, but there were two names wherein they have completely exited their holding. HSIL is right at the top, wherein they have sold close to 2 lakh shares, and Ahluwalia Contracts too goes out completely. They've sold the 21,000 shares that they held in the company, and with that, that has been how the month of August has been for ICICI Prudential.
Interesting. Thanks a lot for that, Yash. So those are some names that you need to monitor if you're indeed following what large mutual funds do. Over the last 3 days, we've told you about SBI Mutual Fund and ICICI Prudential, and of course a story around this on what the top 3 mutual funds have done in the month gone by is also there on our website bloombergquint.com. So do try and go and read that story. Meanwhile, some news bits on ITD cementation, small company but nevertheless active in the session. What is doing well, and if Deepak Shenoy is back with us, is Interglobe Aviation. Almost every single day it's nudged new highs. We're just doing a story earlier on how there might be some go-aheads needed for SpiceJet for their plans. Today Interglobe may be a bit soft, but Deepak, Quite interesting at a point of time when everybody believed SpiceJet will gain out of jets, vacating the space because the planes are similar, so on and forth, and valuations are not that expensive. It's Indigo which has actually gained investor attention. Why so? And what does an investor do now?
Interesting point here. Neeraj, I think the problem really is, when you have an airline go down, who takes its space? I don't think it's based on the aircraft they own. They might just benefit from being able to lease the same aircraft as SpiceJet will, perhaps. But SpiceJet has different operational challenges, and then I think both Indigo and SpiceJet, and perhaps Vistara and AirAsia as well, will fight for the slots that Jet had, and perhaps in that fight we've seen a lot more of allocations happening to both Indigo and SpiceJet. Indigo has probably made a good dent in that space. I don't think SpiceJet is fundamentally going to be worse off than Indigo. It's just that right now I think there's been some issue with their Boeing aircraft, the MAX aircraft, where we have a investigation being launched by DGCA, and that will kind of determine some of the future path here. A lot of those aircraft are grounded and cannot be operated. And if you see SpiceJet's numbers, they've actually taken into account as revenue the amount that they think is payable by Boeing because these aircraft are grounded, though they haven't actually formally received a statement saying Boeing will pay. So they've counted even that as revenue. This sounds very strange to me. So I think that accounting challenge is also going to hurt SpiceJet in the future if, for instance, Boeing doesn't pay. Indigo has other problems. Indigo has founder level problems, but none of that is changing its operational success right now. So I think there we have a good move. In the long term, however, I think the sector is doomed to see another player come and try to lose money and therefore bring everybody's profitability down. So I think you should play these kind of stocks or sectors for a short-term play when crude prices are down. If crude prices were to go up, all of them will make losses, almost guaranteed.
Okay. Stay on, Deepak. We'll come back after taking the dealing room check. Just 15 minutes to go for markets to shut shop. So let's go across to Yatin and Darshan, who joins us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so one of the stocks that's been spoken today and probably will be the stock of the day is the BPCL. Obviously, the news that came out on Bloomberg did indicate that there is a big stake sale that would go through, and spoke to a couple of participants in the markets in terms of what this means if this goes through. They believe that there could be more substantial upside if the deal goes through, because not only BPCL, the entire oil marketing company has done well. IOC has managed to move up because the overhang of them buying stake in BPCL goes, and there could, and privatization to an overseas firm definitely means that some bit of valuation. They were trading at lower valuations compared to Reliance because of legacy issues. So BPCL is something that's been spoken about. Banking as a space has done well, up 300 points on the Nifty Bank. Kotak is one of the banks which has done well in today's trade. Domestic funds indicate that, dealers indicate that some of the domestic funds have been active accumulators in the counter. So that's been spoken about. And the final stock is Indiabulls Housing Finance. Has managed to move up in trade today, but again at high levels. It seems to be finding the issue of some of the HNIs using every bounce to exit the counter. But Yatin, what are you hearing?
Darshan, Ujjivan, again another stock from the financial space wherein dealers do indicate that there is short covering which is happening in the counter, because of which we have seen a 3% uptick coming in. So on the back of short covering, dealers do expect further upside in Ujjivan. DLF also is one stock which is quite active in the future and option segment. Dealers, on the basis of F&O trends and technical trends, are recommending a buy today, sell tomorrow kind of a strategy. 4.5% odd up for DLF, almost 1.3 crore shares traded in the cash segment. And CESC, that is also one stock which is in good uptick, for the past few trading sessions. Dealers do indicate that there is a lot of active HNI interest on the trading side as far as CESC is concerned.
Okay, thanks a lot for that, Yatin. So those are a few names that both Yatin and Darshan have gleaned from the dealing room sources. Wondering, Shrikant, CESC, dealing rooms are saying that there is some active investor or trader attention. It's trading at the high point of the day. Any thoughts here?
I think, see, CES is very clearly into pullback mode. It is just bouncing from the lows of 640 and it is now trading at 840. The previous highest level was somewhere close to 920, 930 levels. But the overall structure is clearly indicating us that it is moving up gradually. So yes, we are going to see the levels of at least 900, 910 in the near future. There we are seeing some good amount of resistance. But currently the stock is into uptrend and it is, yes, it is heading higher. We should look for adding long position.
Okay, so technically this one's looking good on the charts. In fact, we have been observing some long positions also on the future side for CSE in the last 2 to 3 sessions. The other one, which is a day's high, is ICICI Bank. It's almost sitting with gains of about 3%. Remember, this is another heavyweight both on Nifty as well as Bank Nifty. And as we speak, by the way, Nifty is up almost 100 points in trade. It is likely to close around the current levels, and Bank Nifty reclaims the 28,000 mark in today's session at 28,100 as we speak. So very quickly, before we get to the closing strategy, Shrikant, any thoughts on ICICI Bank at day's high? Would you initiate any trade here?
Certainly it's a buy because the stock is holding well above the mark of 200-day simple moving average, which was around 385, 388 levels. From there it rebounded sharply in last some 7-8 days back. The overall formation is clearly indicating us that it is into that consolidation mode, but it is heading towards the levels of at least 435, 440. So even at current price 413, 414, it's a buy. We can keep stop loss at 405 and we can expect 435. We also like Axis Bank, which is trading around 672, 673. There also the stock has formed higher bottom, and Axis is also heading for 690.
Okay, so all these private banks looking good on the charts, but let's get you some closing strategies going. Pritesh, any STBT or any BTST for Monday's trade?
I'd like to add one of the wrong recommendations. We have been talking about the strength in the private banks, but one particular stock from the PSU basket has done incredibly well, and that is SBI. The stock has moved up by 6-7% in this week's trade, and I think there is more room on the upside. See, if you look at the chart pattern, the stock has been holding on to the lows, the support of the rising trend line since the lows of 2018. But thereafter, we have seen a steady state base building coming in around 270, 280 odd mark, and thereafter we have seen this solid big fat candle, and I feel that there is going to be follow on buying coming in. So buy for a target of 310 and maintain a stop of around 284.
Okay, Shrikant, what about you? Your closing strategy would be?
See, I would like to go with Power Grid, which is trading around 202, 203 levels, and here the stock has completed its correction. It is heading for the levels of at least 210, 212 levels. Again, it's a PSU stock and it is showing some specific strength. Apart from this, if we focus on any other stock, then few cement companies are doing really well and they recovered from their lows sharply in today's date. ACC, Ultratech Cement, they are doing really well. But Ultratech Cement, Simco looks really good. It is trading around 4035, 4040 levels. But from here we can see the levels of 4150 or 4200 on the higher side. So Ultratech Simco is a buy at current levels with a stop loss below 3890 and target 4150.
Okay, that's a buy on Ultratech. Yes, there's been a recovery both in ACC Ambuja, both are at days high. And pull up Prime Focus, not sure how liquid this counter is, but it's locked in upper circuit with gains of about 20%, just about NSE, I guess, 42,000 shares so far have been traded here. Deepak, the PSU stocks have been in focus, and just want your thoughts on Bloomberg's story today, where government could be looking for a global player to acquire a stake in BPCL. We've had reports earlier stating that IOC could pick up, but do you think this could face the hurdle, privatization of a PSU company, which may require parliament approval as well?
This is quite interesting, to be honest, because we've, as a disclosure, I've held BPCL for a while, and one of my bets was that it would be the PSU that would be privatized, because we felt that it was most likely in the sense of the operational process would have involved IOC not to be privatized because it's too big, and HPCL was anyway getting absorbed. So this is a very interesting play because BPCL owns a substantial amount of retail assets apart from the fact it owns the refineries and some of the real estate around it and so on. But here's also another thing. The value of this is also in the fact that within cities, wherever BPCL owns or BPCL has relationships with the vendors who kind of set up the petrol pumps for them, the relationship is very difficult to break, and because they have a clause that those people cannot take on another competing oil company dealership for a period of, I think, 5 or 10 years. So any buyer will get access to this within city, extremely prime real estate and retail machinery for whatever the cost is right now, which is relatively very, very small in comparison with what it should be. So at 87,000 or 88,000 crores, I don't think this is a company that is fully valued. So I believe that if there was actual privatization, not a small stake sale, but an actual privatization, and this is passed through Parliament, I believe this will actually be a very, very good thing. And why does the government need to own three different oil marketing companies, all of whom do the same thing? I just don't understand. It's owning two is also a little bit too much according to me, but at least at this time we should try to privatize one. And I'm happy it's BPCL because personally because I hold it, but anyone would have been good, and I think it will be a good attempt for the government to see if there's value here and see how the unions react to a news like this. I hope there isn't mayhem. It will actually be very good for BPCL if it were to be privatized as well, and for the employees.
Okay, Deepak, we'll leave it at that. Thanks much for taking the time out. Have a great weekend.
Thank you. You too. Thanks.
Well, it's closing in at the highest point of the day is BPCL. Do watch out for this one. Pritesh, we haven't discussed these stocks technically. BPCL we have, HP and IOC. Would you believe that there is a trade existing for those two?
Yes, I did mention about IOC that it is a good trading idea, and we mentioned a target of around 40. But I think there is more room on the upside for IOC compared to BPCL. Yes, we saw the external news and events taking place within the counter, but I would still put my bet on IOC. It looks more in terms of upside potential, IOC has more room on the upside.
Okay, IOC is the idea from Pritesh. He believes that that's the one that will actually have or give the bigger bang for the buck. Look at the move in the oil marketing companies the last 30 minutes. Once that Bloomberg story broke out, the stocks have been on fire. Well, let's start wrapping up the markets. They are on fire too. Nobody quite anticipated this at the start of the trading session really, but well, it's all smiles. We're ending the week very, very strong compared to what we've done in the recent past. About 1% apiece for each of the three key indices. Thursday tends to throw a bit of a spanner in the wheels, a bit of a deception, and then Friday again back to normal. The mid caps and the small caps, I don't know if they would have rallied as much in the last 1 hour as some of the large caps would have, but those indices will also come up on your screen. Should get the BSE mid cap and the small cap indices as well as S&P 500, and those indices too. Clearly, they have not rallied as much as the large caps have, but a rally nevertheless. But let me talk about the large caps now. We will bring you up to speed with what's happening at the broader end of the spectrum. BPCL 6.5%, IOC about 4.5%. Its strength in Titan about 3.5%. ICICI Bank and Vedanta also stay high. JSW Steel stays high. Hindalco about a couple of percentage points. UPL about 1.5%. So good going for all of these. What's not doing well? Indiabulls Housing Finance 2.5%. DRL about 1%, Sun Pharma about 1%, HDFC Bank about 0.5%, Britannia about 0.25%. So FMCG maybe a bit of a pullback, but the high beta counters, some PSU names doing extremely well for themselves, and therefore the market's ending or about to end almost about 1% higher. Broader markets maybe not as strong, but not a bad day.
Not at all, Neeraj. In fact, there are more gainers on my list than losers. So let me start off with DLF, which was your top gainer on the Nifty Realty Index, which was quite active for the week. The index gained about 4 to 5%. So DLF's closing with gains about nearly 3.2%. Motherson Sumi, an upgrade coming in from Goldman Sachs, a beaten down counter, but still there was some buying seen around the lower levels once again. So 4.5% for this counter. Kajaria Ceramics, one of the top F&O gainers right from the word go. There was both price as well as open interest action seen for this counter, and it's closing closing around the levels of about 516 thereabouts. ITDC, that was locked in upper circuit with gains of 20%, and this counter has been very active in the last 4 to 5 sessions. So 267 is the level where it closes. And your public sector undertakings were in focus: MMTC, Hindustan Copper, and also something like State Trading Corporation, that's STC, which gained about 14 to 15% respectively. STC gaining around, closing around the day's high mark of about 17%, and Hindustan Copper also gaining 12.5%. And Khadim, this counter was active. It's a footwear company. Remember, it's a recent listing also of last year, so 15% higher right from the word go. I think in the morning only there was some buying interest seen, and that's closing with around the levels of 270. On the losing side, water-based was weak in today's session. Some selling pressure was seen here, so it's closing a day's low with cuts of 5%. Couple of pharma companies were weak, so one of them was Glenmark Pharma, which was down today. In fact, it's been an underperformer for this calendar year as well. And Piramal Enterprises, I think throughout the session, this counter was in red, could not witness any sort of recovery, just marginally, I believe, towards the end, down 3%. And Indian Energy Exchange touched its 52-week low. This counter fell about 9 to 10% in trade.
All right, we've got a weekly close today after today's good move on the index. The day's close is positive. Hopefully that translates into a positive weekly close as well. Nifty Bank has been up about closer to 300 points today, scaled that 28,000 mark for the week. Sensex and Nifty 2, Nifty closing above that 11,050 mark. Taking you through the weekly performances, let's just pull that up, and you've got the Nifty 50 with gains of closer to 1.2% for the week. And Yes Bank is the top gainer. I would probably attribute the moves to yesterday's big move that you saw on the counter. BPCL, and this is today's big move that's come in on the stock. Tata Motors also had a big day, I think on Wednesday or Thursday is when it saw that big move. Wednesday, I believe. Hindalco, State Bank of India, ICICI Bank, some of the other big moves. Amongst the losers, you've got technology as a pack looking weak, and then Z was down about 2.5%.
Well, it's been a great week for the markets, and our broader markets definitely outperformed, I think, on majority of the session. So let's take a look. Nifty Midcap Index is closing the week with gains of 2.2%. Your top gainers were from the likes of HEG Limited, up about 16%. Sterlite Tech registered gains of 16%. Even Graphite was up about 15%. So other gainers were JSPL, Future Consumer, and RBL Bank, which bounced back. That was up 10% for the week. And also Escorts, the entire auto pack saw some bounce back from lower levels. On the losing side, Info Edge has been under pressure for last many sessions. Glenmark we highlighted today also, it was down in trade, and likes of Hexaware, Apollo Hospital, as well as REC were a couple of stocks which were down in the range of 2 to 4% respectively.
All right, that's what you've got in terms of the weekly performances as well. Walkhard isn't in this list, but I'm sure it's amongst the best performers on the index as well. But getting you some quick closing comments this afternoon. I think we have our technical experts joining in right now.
I think we can just take a look at the turnover first and check how we're closing.
All right, let's take a look at the turnover.
In terms of participation.
30,000. So this is pretty average. We would say we are coming back in line.
Yeah. Even the F&O turnover, I think it's just slightly above the average that we've seen in the recent past, 9.2 lakh crore. Okay, let's take closing thoughts from our technical experts. Then Shrikant, come Monday, it's been a good week for the markets. How would you view the indices? Would you initiate any fresh positions come next week?
See, the broader breadth of the market remained very strong throughout the week. It closed higher, and it closed almost at its highest point of the week as well as of the day. It was a completely confusing day because in the first half the market was completely down. In the second half it recovered, and that is also towards the end in last 1 hour. So because of that the volumes are very low. But while looking at the overall performance of a number of indices, one thing is very clear that we are heading higher, and the best part is that the market has broken yesterday's highest level. So above 11,080-85 we can expect next level to watch out for is between 11,200 to 11,300. So it's a buy on Nifty as well as for Bank Nifty also, because the Bank Nifty has also crossed its previous high of 28,100, which is positive, and here also we can expect 28,450, 28,500 on the high side. The broader base is good, and that's why we should look for adding large cap as well as mid cap to our trading portfolio.
In fact, come next week, I think 200-day moving averages will be back in focus. Nifty is somewhere about 11,220, and Bank Nifty is somewhere about 28,620. Pritesh, 11,150 has been a resistance even in the month of August. Let's say if we cross that mark next week, do you see the indices moving higher? Nifty, I mean.
I think so. We are in for a strong round of rally. See, I think plenty of pieces of puzzles are falling into place now. We had that lack of participation in broader markets, but that was not the case this week. The mid cap and small cap index have made a comeback, and one missing piece was the Nifty Private Bank Index. We are not mentioning it for quite a while now, but I think they have been the biggest driver in today's trade, and I think they were a strong comeback. And the way the charts are shaping up, the next round of rally could be led by this section of the market. So I think we are talking about a strong possible rally in the market, which could be driven by the large cap banks.
Well, okay, let's wait and watch private banks and large cap banks, and if they indeed deliver. So those are the thoughts from both our experts, and interesting to see the bullish undertone out there from most of our experts, really. Thanks so much, Shrikant as well as Pritesh, for joining in today and giving us your thoughts, and have a great weekend. I'm sure the Bulls will have a great weekend because it's been an exciting week nonetheless. Let's see if this gets translated into next week. For now, though, from Navneet, Devina and me and the team that put this show together, thanks so much for watching.